What is good, guys? It's Rey-Jay back with another video. And this one I want to break down what's going on with the overall market and talk about how the technicals are looking. I'm also going to talk about some very important information about CPI coming out for tomorrow and how the charts are looking so far approaching the big event. But before I break anything down about all of this information, before I get into any more details, let me just mention a couple of things. I am firstly not a financial planner, so take none of this as financial advice. And also, if you guys can, please check out the Webull link, which is down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you are guaranteed up to 12 free stocks. The offer ends in just about 2 days, so check it out before they run out. Anyways, let's break down what's going on with the market. So as you guys know, Apple had the big event, and this had a big effect on how the market moved. Apple announced the new iPhone 15 Pro and the Pro Max, not to mention some new features for the next-gen Apple Watch. And it was looking very, very awesome, the Series 9 especially. The Apple Watch has a lot more functionalities with the more upgraded GPUs, not to mention very, very cool features that people could use with their hands, such as like clicking their index fingers and thumbs together to just get the watch to do more things. So very, very cool technologies. I'm very excited about what this is going to bring for Apple. But despite this coming out, and one of the things I warned you about is how when we have big events, Apple tends to sell off. And that is what happened today. Apple continued to sell off, and this dragged SPY and the market down quite a bit. We also saw Tesla drop quite a bit too, thanks to that. So you can see this had a big effect on the markets. But now going into tomorrow, this is not going to be as impactful. What matters more is going to be the CPI numbers. That's going to be very important. So what numbers are going to be important for tomorrow? The two most important ones are going to be the year-over-year inflation rate, not to mention the core CPI year-over-year simultaneously. Those are two of the most important ones. We're going to be watching this for tomorrow, 1 hour before the market opens. So make sure you're ready for this. Make sure you guys wake up early if you want to see it early and be prepared for what's about to happen. Anyways, when it comes to the data, okay, we're expecting CPI year over year to be 3.6% or lower. If it's 3.7% or higher, that's going to likely lead to downside in the markets, okay? And then for core CPI, we want this to be 4.4%. That is CPI without food and energy, 4.4%. If it's anything more than 4.5% or higher, that is going to lead the market to selling off. So make sure you're prepared for this. These numbers are going to be very, very important. We also have the forecasts for month over month and for core month over month. Those are also important, but the bigger things are going to be year over year as we tend to see the headlines built around those. So make sure you're prepared for this. Make sure you are ready for this. We're going to find out how much inflation increased by. We're expecting an increase in CPI, but not an increase in core CPI. This is going to be very telling. So here's how the chart has been looking. You guys can see this clear downward trend on both core and CPI. Core is a little bit more sticky. We're expecting, according to the data, core to come down a little bit more. That's what we want to see. We're expecting CPI because of energy to still come up. So just CPI for all items. This blue line should be coming up a little bit, but as long as it's aligned with expectations, the market is going to be fine. If it's a little bit hotter than what we're expecting in the ranges I just mentioned, that could cause some downside. So when I say if inflation is hot, I'm going to be referring to CPI year over year being like 3.7% and core being 4.5% or even higher than that. That's what I mean when I say if CPI is hot in this video. If I say it's as expected or lower, referring it to meeting these forecasts or being less than them. Okay, so that's one of the terminology I'm going to be using later on in the video. I will talk more about that in just a couple of minutes. Some more data is coming out suggesting that the numbers are not that bad. They're basically implying that with oil prices going up, and this is due to production cuts, we're likely going to see an increase in CPI, but it's not going to be that bad as there is clear progress being made. You guys can see it right here. There's progress being made since last year. So that's what this article is basically talking about. And we'll see what happens because the most important implication about this would be the Fed is going to change their policy based off this or maybe make any possible adjustments. So if we get a hot CPI, the Fed may be more hawkish during the next FOMC meeting. That's going to affect the whole stock market. If not, if we get a decent CPI, the Fed can be more dovish. So now let's talk about the charts. I want to be honest with everyone. I can't promise anything. I don't know what's going to happen for tomorrow, okay? But based off technicals, we are looking like we're more likely to be more bearish for tomorrow. Now, let me clarify. There's always the possibility that this is a trap and they're trying to trick people into thinking that way. There's always that possibility. That's why you need to be open-minded. But based off technicals, and when you see how like Tesla and these other tickers are looking, the odds do favor the market potentially coming down a little bit more, right? So I'm saying there's like maybe a 55% chance we see downside tomorrow and a 45% chance we see upside. That's how I would view it based off what I'm about to show you on Aapl, Tesla, SPY, and etc., and based off technicals. However, I can't say anything with 100% certainty, excuse me, because it depends on CPI. I hope that's as clear as possible. Anyways, if we get a good CPI, okay, if CPI is lower than the expectations or as expected, we could see SPY start pushing towards the 450 plus area. If we get a hot CPI, we're going to see SPY start tanking towards 440. That's going to be a big drop. What seems more probable based off technicals? Now, technicals are not everything because of the fact that the data is what matters so much more. But technicals suggest we're more likely to see some downside because this does look like a slanted head and shoulder, and the 4 hours about to get a bearish cross. So it's looking a little bit more bearish, but just to be safe, let's see if CPI causes downside. Now, I'm not promising it. I'm just saying, like I said before, it depends on the chart. It depends on the data, excuse me. For Tesla, this is also looking a little weaker. If you look at Tesla, we got this nice downtrend. We're about to get a bearish cross in the PPO right here. It looks more like Tesla's going to see some downside. But just to be open-minded, just to listen to this, a good CPI report that's as expected is going to lead Tesla to pushing towards 275. A bad CPI is going to tank Tesla down to like 260, if not 255. What seems a little bit more probable based off technicals? Technicals are not sufficient, but they are suggesting we may see some more downside on Tesla. The 4 hour is starting to look weaker, but I just want to be open-minded just to be safe, so I'm always prepared for anything. Aapl is also a little concerning for the bulls because we have a clear head and shoulders on Aapl. So it's not just Tesla looking weak, it's not just SPY, it's not just QQQ, which I'm going to show you, not just Nvda, but also Aapl. Aapl has a clear head and shoulders forming. If we truly are going to see some downside off CPI, Aapl could eventually come down to like 171 to 170. There is a possibility of downside, which could drag the markets down. However, this could be a trap. Okay, they could always be trying to trap us into thinking that way and push the market up anyways. So you want to be open-minded just to be safe. Now, if we're bullish, Apple's going to approach 180 plus. If we're bearish, it's going to come down to like 171. What is more probable? It's a little bit more likely this head and shoulders will play out, in my opinion, and we're going to see downside, but I can't promise that. It depends on the numbers, just to be as clear as possible. For the QQQ, if we're bullish, we're going to be watching this thing push towards 378 to 380. If we're bearish, we're going to be watching it tank towards 368 or less than that. What seems more likely? It's looking like we're about to get a bearish cross in the PPO, and we have a possible slanted head and shoulders. Now, I'm always open-minded. I'm not going to necessarily just be too fixated and too obsessed with just one of these possibilities because it's going to create some more bias. Okay, so I'm always open-minded to anything. I just want to note that technicals look a little bit more bearish heading into CPI, and this makes it a tiny bit more likely that we're going to see downside thanks to CPI. Am I promising it? No, but I'm just saying it's a little bit more probable. Another big red flag would be Nvda. If you look at Nvda, this thing has been downtrending pretty hard. Now we had a possible head and shoulders that was kind of like distorted, and Nvidia is continuing to downtrend. It's looking weaker. We actually closed at our critical support, but it's not really getting much of a bounce. We're not forming a good divergence. There is technically like a bullish divergence trying to form on at the RSI, but there's no sign of it bouncing or like playing out just yet. So I'm still in the middle, but it's looking a little weak so far. A good CPI would launch this thing towards 456 plus to 460. A bad CPI takes it down to 440. What looks more probable? Well, if you look at the trend, it has been continuing to downtrend. The odds do favor it coming down to 440 possibly. However, that's just based off technicals. We'll see what CPI causes. And I could basically say the same things for the rest of the market. If you look at the VIX, I mean, the VIX has a potential head and shoulders too. I don't know if the VIX is going to try to break up or if it's going to just continue to sink down to fill this gap. That's going to depend on CPI and other factors. If the VIX comes down to this gap because of CPI, the market could bounce, right? There's always that possibility. The VIX is kind of in the middle, but if there's an unexpected increase in CPI that's too hot, we could see the VIX start pushing towards 15 plus, and that could be a big catalyst to potentially slow down the markets. So we just want to be open-minded. You never know what's going to happen with the VIX. Same thing with the dollar. The dollar is kind of flat. We'll see if the dollar gets a break in either direction. But one thing worth noting is that the dollar has this gap. Is this a glitch? Let me just double check if this is a glitch or not. But if the dollar starts bouncing off the 50 EMA and starts pushing towards 105 again, that could be a bearish signal. We're currently at support on the dollar. We'll have to wait and see. We're seeing the MACD crossing a little bit, starting to curl. We will see if the dollar bounces. If it does, that's going to be a bearish signal. And last but not least, I'm just going to quickly talk about a couple of others. Amazon looks more bearish approaching tomorrow. If we get a good CPI and this like surprises us, Amazon could push towards 143. If we get a bad CPI, it's going to tank towards 138 or so. We're going to be watching this imbalance though, so I would say like 138.6. What seems more probable? Well, I'm always open-minded as it depends on CPI, but the odds do favor it coming down looking at the current technicals. Based off technicals alone, even though they're not entirely sufficient, that is what is more probable. On Meta, if we're bullish, you're going to be watching for a push towards 305. If we're bearish, we're going to be watching it come down to 296. We also have this gap down here on Meta. What seems more probable is Meta filling the gap and coming down to 297 or even less than that and seeing downside. We have a bearish cross on the 4-hour PPO. It looks a little bit more weak, so we might see some downside. All right, guys. So just to clarify, please do not attack me if the opposite happens, but I'm just trying to be honest with you. I'm open-minded to anything. I'm always going to try to be unbiased when I say these things, but just based off technicals, the technicals are suggesting we might see some downside in the markets. That seems a little bit more probable. And we'll have to wait and see if CPI confirms this. Could these technicals be a trap? There's always that possibility. But I just want to make it clear. I think there's maybe like a 55% chance we see downside tomorrow and a 45% chance of upside. So I'm leaning a little bit more in favor of the bears for tomorrow, but I'm always open-minded just in case. I'm always prepared for anything. Okay, so I hope this is as clear as possible. Get ready for CPI. It's coming out 1 hour before the market opens at 8:30 a.m. Eastern Time. Do what you have to do, guys, and I'll see you guys in the next one. Thank you so much, and peace out.